Well, welcome everyone. It is time for another stock market weekly update. You know we love talking about this weekend recap. Obviously only a 4-day trading week, so you get this one on Sunday as opposed to Saturday, so I hope you're not too upset. But if you hear any large booms, don't worry, I am not in a war zone, thankfully. But we are just, enjoying the fireworks right now and decided to record this video because, well, I'm about to go to bed because I got work in the morning. So we're going to go ahead and get this one in. So we'll start with our portfolios, the Robinhood, then M1. Follow that up with the good old how the indices did. Then get into some news. So on the week, our Robinhood portfolio was up 3.67%. Not too bad, all things considered. We'll certainly take it. Yeah, we like to see that. Good gains this week, $635. And all time now, we're up 26.89, or the equivalent of $3,805. Pretty good. As far as how this week went, we'll look as a little weekend recap here. Starting on the 29th. Obviously, the small cap dividend fund from Wisdom Tree DES paid 12 cents. Or 6 cents per share, so I got 12 cents total off my 2 shares. Nothing exciting there. Gilead Sciences paid solid $2, 4 cents total for me. Gotta love that. So off of my 3 shares, so that's quality. The KBWY High Yield Financial, or this is the KBWD, sorry. High yield financial portfolio paid $1.20 in dividend there, so that is the equivalent. It purchased 0.08 shares for me. Gotta love that. The right after them we have the different one, KBWY, the Power Shares KBWY Premium Equity REIT portfolio paid $1.99, which purchased me 0.10 shares. So gotta love that. More dividend, you gotta love it. These 3 ETFs pay at the same time, so you have SPHD here. Paid me 87 cents on a dividend, which got repurchased for 0.026 shares. So nothing significant in that aspect, but we love it because it's a monthly dividend payer. We love it. Garmin paid a dividend. I only have 1 share, so it paid 61 cents. That got reinvested. Let's see. We also had HP pay a dividend out. Nice dividends this week. We love it. We love to see it. HP paid a dividend of $1.90 off my 10.8 shares, so that reinvested for 0.11 shares. Coca-Cola paid a dividend, $2.05, which got reinvested back to 0.045 shares. And Iron Mountain will be reinvesting the dividend next week, $17 from it, which will be the equivalent of right around 0.6 of a share at this point, maybe 0.7 maybe. So going to be exciting to see that addition. And I've added quite a bit more of Iron Mountain too, so next dividend is going to be even higher, probably around the $20 mark. So we love to see it. So that would be our Robinhood portfolio, our M1. You see on the week we were up 0.55 only, and all time brings us to 26% up, or the equivalent of $1,098, 753 in market gain, and 344 in earned dividends. So nothing major this week. Dividend wise, we got Iron Mountain, obviously. We had Brookfield Renewable Energy Partners paid, obviously, dividend here, equivalent around $2. A little bit more than $2, thankfully, so gotta love that. And Public Storage paid $1.07 dividend, and Pepsi paid $1.61. We also had SPHD and Gladstone Capital paying a dividend as well, so gotta love that. Gladstone paying $2.87 and SPHD paying $1.45 on this one, because I do own right around the same amount of shares. More shares on this one though, so you gotta love it. That's it for this portfolio, obviously. Gotta love it on the all-time. We love to see it. In the meantime, in the same time period, the Dow Jones performed with a 0.32% gain on the 5-day chart. So both portfolios luckily outperformed that. Year to date down 9.5 now. Not bad, all things considered. I think we're due for some negativity in the market coming up with new shutdowns coming up. But who knows? The S&P 500 was up 1.5 on the week, so Robinhood outperformed it, but the M1 did not. Overall, year to date, right down around 3.12% down. For the Nasdaq, we've got a 1.9% upward movement. Year to date brings us to 13.76% up. That's a very big upward movement, but not too bad. But the Robinhood portfolio outperformed all of the indices this week, so pretty nice on that aspect. But the M1 did underperform just a little bit. But we got some dividends in the meantime. As far as the news front's concerned, there's talk of the Stop Hate for Profit campaign, the dumbest thing you've ever heard, against Facebook, where people are pulling their ads, while internally these companies are profiting off the back, like Nike profiting off the back of sweatshops, companies like the North Face doing similar, underpaying workers and putting kids into pretty much forced work. Yeah, but they're going to say we're not going to advertise on your platform because some people post hateful stuff. So that's how that goes. We have Uber offering to purchase Postmates, which isn't it's not a shocker. They were originally going to be purchasing Grubhub, but obviously that did not work out for them well. Postmates is not that exciting. Again, I talk about this for Grubhub, and I meant the same thing for Grubhub. And Uber. These are both big negative losers. They just lose money like no one's business. And Postmates is in the same boat. And if Uber purchases one of these companies, they're just going to keep losing more money. The food delivery industry really is not profitable right now. It just isn't. None of these companies are profitable by any means, and usually they lose a lot of money. Uber itself is losing a lot of money, and it's working on progressing that, but they're progressing that through the rideshare business. They're not progressing it through the food delivery. That's still a negative earner and hasn't really shown much progress. So even if they purchase another company, I'll be curious to see what happens. Royal Dutch Shell is writing down between $15 billion and $22 billion in assets in the second quarter. That's wild. So again, that could be quite a bit. That's investments, cash, really inventory. So definitely a big boost as far as their balance sheet's concerned. Big boost. So I'm curious to see what that looks like as far as the debt line, because the debt line certainly is probably increasing quite a bit. The U.S.-Mexico-Canada trade agreement has taken effect just this week too. 1st of July it took effect, so you gotta love that. It replaces the North American Free Trade Agreement, which took effect in 1994. And again, the NAFTA was kind of a nightmare for us, right? It put us in a large amount of debt. I was not a huge fan of NAFTA, and neither was our current president. And you know what? He went ahead and went for a new trade deal, ideally looking for something better for us. Yeah, it definitely could be nice. So, cutting their April goods trade flows, normally around $1.2 trillion annually, to the lowest monthly level in decades. That's wild. Obviously, no one's trading right now because everyone's in recession mode. Tesla's become the most valuable automaker in terms of market cap in the industry. That is what I probably find the most ridiculous thing that this market sees right now. This is one of the most ridiculous things this market could see. So companies delivering 500,000 vehicles every quarter now are getting trumped by a company that's not even delivering 100,000, right? That is incredible in my opinion. I don't know how that is feasible, but you know what? Let the auto industry do what it wants. Let the market trade how it wants. You can't stop people. They're going crazy. McDonald's says it will delay the reopening of dine-in services in the U.S. As we've got a rise in cases again. Not a shocker again. People protesting like no one's business. they're all getting it, okay? They're all getting it. Stop with the protests, maybe, and we won't have many. As much as the news outlets may tell you that protesting does not give you the virus, I'm sorry to tell you, it's giving you the virus. It doesn't make it exempt if you're protesting. But we had a banger of a jobs report for June, adding 4.8 million jobs versus a 3 million consensus, and a 2.69 million previous. Incredible. So last month's actually did rise. It was revised from 2.5 million. So we actually gained more last month than expected. This month, 4.8 million is crazy. So unemployment rate has fallen to 11.1 versus a consensus of 12.2 and a 13.3 previous. Honestly, the recovery is pretty quick there, I must say. Obviously, these are ridiculous levels of unemployment. There's no doubt. I've mentioned this a lot. A lot of the reason for it is just the incredible amount of benefits that we're giving unemployment. We're giving people who just don't even want to bother finding a job $600 immediately just from their federal government. And you think about state level, pays more as well. We're giving people some, in most cases, around $900 a week to do literally nothing but sit home. There's no incentive to get a job for a lot of these people, right? There just isn't. If you can mooch off the government, which is, again, might as well just do this universal basic income thing. It doesn't work. Sorry, the government it just can't do it. The cost of goods goes up. It doesn't work well for us. It'll inflate us to no one's business, but this is just a good example of it. So, again, once these benefits stop here in June, or July, I should say, my hope is that hopefully people, get back to work, because they'll need to now that they're not getting free money. Forget about that. That was nonsense. I'm sorry. So Amazon has delayed their Prime Day back to October now. Delayed it yet again to October now. And again, the main focus of this for them is having the staffing. So that is why they've delayed it. It's not really due to most things. It's because of the fact that they need staffing. And they need staffing on all aspects. People to package, people to deliver, people to, first off, they need to get the products in, which can be difficult during times of crisis and pandemic, no doubt. Anyone working in supply chain knows that. They need people in their warehouses to package these. They need people to send those packages out and deliver them, actually. So they need a lot of help with that. During Prime Days, it's their biggest day of the year. So they need a lot of help. And I know anyone right now that has a job can probably tell me that there's a good maybe 10% of their workforce that is pretty much inconsistent with coming into work because of everything going on right now. So if you have 10% of the company out, you can't expect to grow business year over year on an Amazon Prime Day, right? You just can't. The question is, with it being so close to major holidays, how is it going to stack up? If it's in October, how's it going to stack up? Are people just going to wait until Christmas? Or is Christmas going to be weak for them? I'll be curious to see. I think Christmas is going to be a little bit weaker for them than they expected. Q4 might not be the best for them, but that's all I got for you today. I hope you enjoyed.